Okay, this is the Fin Nifty expiry of 3rd September, Tuesday, and you can see that Fin Nifty was trading in a sideways day, and around 2 o'clock it made a fake breakout, and then you can see that it made a big movement and almost 300 points movement on expiry day on September 3rd, and which was the day slow. Day slow was around 23,618, and if we go and choose the 23,618 option and replay the button, let us see what was the movement. You can see that it made a low of around 45 rupees, and as underlying spot started making a big movement, you can see that even option price also started moving. From the day's low of around 45 rupees, it made a high of around 320 to 330. So that means almost 8 times this 23,600 call option mode for 300 points movement in Fin Nifty. Now let us check the 23,800 call option. Day's low was around 2 rupee 50 paise around 2 o'clock 2:15, and let us replay the button and let us see how much 23,800 option mode, and you can see that from the day low of around 2 rupees it made a high of almost 137 rupees for 300 points move in Nifty. So that means this option went almost 70 times. Now let us say how much move 24,000 call option gave. Let us replay the button and you can see that it was making a low of say around 36 paise. So you can see that this 24,000 call option did not move much, right? It was making a low of around 25-30 paise, then it made a high of around 2 rupees, and finally at 3:30 it closed again at 0. So the person who has chosen 23,600, he made a big money. The person who chosen 23,800 call option, he made a big money. But the person who has chosen 24,000 call option, he did not make any money. So why this happens that sometimes some options moves very fast, giving 10 times, 20 times, 50 times kind of movement, but some option doesn't move at all, right? So that is what I'll be discussing hero or zero video series, which I started last week. Last week already I made one video, and this is the second part of that video. In this video, I'm going to discuss about the which strike price to choose for hero or zero trades, because many new option buyers who wants to trade in hero or zero, the biggest mistake they do it, they don't know which strike price to choose. They choose some strike price which is cheap, like which is available in single digit, and they think that it will become 50 times, 100 times, and they make a lot of money, only to see that end of the day that option price doesn't move and it becomes zero. So that is what, if you are an option buyer and want to trade in hero or zero, then choosing the right strike price is very important. That means you need to know which you have to choose, because there is no guarantee that if underlying moves mean the option whichever you choose, it will also move. Okay, so that is what in today's presentation I am going to discuss which strike price you have to choose. Okay, so remember, you already know that options are three types: ATM, OTM, ITM, right? So ITM option have a higher premium because here delta is more, but it has a less gamma. And delta gamma also I already discussed in my previous video. To brief you again, delta and gamma are the option Greeks which will decide how much your option will move for the movement in underlying. For example, Nifty, if it moved from here to here 100 points, then how much your option will move, whether it moves 50 points, 30 points, 20 points, 10 points, 100 points, how much it will move. That is what decided by delta and gamma. And also in the last video I discussed that delta is more like your car. Okay, to remember it easily, whenever somebody says delta, then think that delta is your car. Your car will not move, your car will not go faster until you press the accelerator, right? Your accelerator is somewhere here. You have to put the pressure to the accelerator, then your car moves faster. As long as you are pressing the accelerator, car will keep moving faster, and when you remove the foot of your pedal, what happens? Car will slow down, right? If you press the accelerator, car will go faster. If you remove your foot from the pedal, then car will slow down. Same way in options also. As long as gamma is accelerating, option price also keep going, right? Sometimes you see that 1 rupee option goes to 50 rupees, 100 rupees, right? Why it happens? Because gamma is accelerating. If gamma increases, then only option prices shoots up. If gamma comes down, option price comes down. Delta also important, but for hero or zero, gamma is more important. So that means item option will move. Okay, item option also moves if there is an underlying movement, but move is not huge. So item option trading at 50 rupees, it will not become 5,000 rupees. That means it will not become 100 times. So 50 rupees maximum, it may become 200 or 300. I mean, just I am giving you example. That means 4 times or 5 times, like that. Okay. Item option accelerator slower compared to ATM option. What we need, if we want to drive our car faster, we have to keep pressing the accelerator, then only car moves faster. So which option have highest gamma? ATM option. But once ATM option becomes ITM, okay, you know ATM, for example, 22,000 call option in Nifty at the ATM, right? So currently Nifty trading 22,000 and Nifty goes 100 points, 22,100, then this ATM becomes ITM. Understood, right? So I hope you have understood. ATM will not remain ATM. Now it will become ATM because Nifty moved 100 points. So that is what, when ATM option becomes ITM, delta is still high, but gamma reduces. So it doesn't accelerate much. That means your car will move. Okay, your car will not stop if you remove your foot from accelerator, but it will slow down. Okay, so same way, if ATM option, when it becomes ITM, it still moves, but it doesn't move faster. So OTM option have a lesser delta and lesser gamma compared to ATM. So premium also cheaper. That's why you see that when you go for OTM, premium are very cheap, 1 rupee, 2 rupees, 5 rupees. Most of the time it's in the single digit. But as underlying price moves towards it, its gamma accelerates because now that OTM likely to become ATM. So here we have seen that gamma reduces here because ATM becomes ITM. So gamma reduces, right? But in this case, here I said, even though OTM has a lesser delta, lesser gamma, but when OTM is likely to become ATM, gamma accelerates because we already discussed gamma is highest at ATM. Now you have understood what I mean by that. Nifty trading around 22,000. Okay. So 22,200 is what? It is the OTM option, right? Because Nifty is trading here, then this becomes your OTM call option. So now you expect that, oh, there is going to be a big move is coming and you bought a call option here. Maybe it is trading around, say, 3 rupees. Then suddenly 200 points move comes in few minutes. Then this 3 rupees can become 30 rupees, 60 rupees, or 90 rupees, 20 times, 30 times. Then it can become a jackpot. Okay. So that means 3 rupees option suddenly become 30, 60, 90, 100 or more than that, because now this OTM likely to become ATM now because there is a huge move coming in Nifty. And OTM, which is too far. For example, we discussed 22,000 currently Nifty trading. So what is the too far? Too far mean 22,500 call option, which is 500 points move away from current price, right? And maybe that option is trading at 50 paisa. Maybe that option is trading around 30 paisa. So when options too far, 400, 500 points away, I'm talking all this about expiry days, okay? On expiry days, not on other days. So such options have a less premium because too away from the current price. So less chance of becoming ATM or ITM. So you know that when price too away, it less chance of become ATM because Nifty has to move 500 points. If you take a 700 points away option, then Nifty has to move 700 points. Then only that option will become ITM or ATM. It is very unlikely that underlying will move 500, 700 points in a single day, right? Very rarely it happens. So that is why you see that 2 for OTM, 400, 500 points away ATM, it doesn't move much even though underlying is moving. Unless very massive move comes in underlying, like 400, 500 points move in minutes and still there is enough time for expiry. Okay, now coming back to the chart which I shown you earlier, that I shown you that 24,000 call option, even though there was a huge move in underlying in Fin Nifty moved almost 300 points, but this 24,000 call option, you can see that it hardly moved, right? It went from here around 2 rupee 50 paise or 60 paise and finally it became zero. So what is the reason for it? Reason is, if you come to the spot chart where Fin Nifty closed, Fin Nifty closed at 23,920, but here in this example we have chosen 24,000 call option and it stayed OTM, right? And that was the expiry day, so it lost all the premium and it became zero. What I said, that OTM option has to become ITM, then only you can expect a big move, right? By 3:30 it was OTM when that big move came from here, and at 3:30 also it stayed OTM. We have taken two more examples, right? We have taken the example of 23,800 call option. You can see that from here low of say around 2 rupees, it went high of almost 138 rupees. This option gave a huge profit. What is the reason for it? Because this option strike is 23,800 and Fin Nifty closed at 23,920. 23,800 call option was somewhere here, so it became ITM. So this option became ITM. And the next one we have chosen is 23,600. Okay, so you can see that from a low of around 45, it made a high of 340. That means person who have bought 23,600 call option, he also made a huge profit. And what is the reason for it? Reason is 23,600 call option, that also became your ITM, right? From ATM it became ITM. 23,800 also became ITM, but 24,000 did not become ITM. It stayed OTM. That's why person who have chosen that strike, even though there was a huge underlying movement. So now which strike to choose? Now important is, before choosing the strike, you have to decide how much move you are expecting in underlying. So before choosing the strike, you decide how much move you are expecting in underlying. That means you should have some price action knowledge, whether it's a breakout, whether it's a retracement. So that means breakout mean if there is a strong resistance and after some time if it breaks, most of the time breakout can lead to big move in underlying most of the time. If it is a retracement, that means you can't expect a huge move, right? Breakouts normally give big moves, retracement normally gives slower moves. Based on that, you have to think the chosen strike will go ITM or it will not go ITM. So that means 22,000 Nifty trading here and 22,100 is a OTM, right? 22,200, this 2 becomes OTM, this becomes your ATM, right? Now you have to decide, when Nifty is trading at 22,000, whether you are expecting a breakout so that within minutes it can go and give 100, 200 points move, or if you are thinking that it is not a breakout, rather there is a strong support, so you expect that Nifty will bounce, so that means slowly it can go for 100, 200 points. So that is what I mean to say, how big move you are expecting. And also important is that how much time left for expiry. You know that market closes at 3:30. If it happens at 2:45, 3 o'clock, you know that hardly there is half an hour left. So that means it is risky to go for 200 points away strike and all this, because there is no much time left for the day, right? But same time, if there are 2-3 hours left, then you know that okay, there are 2-3 hours left for expiry, chances of price moving 200 points is higher. Okay, that is how you have to take that guess. So if you expect a small moves like 100 or 200 points move in underlying, then less than 1 hour left for expiry, then I suggest better to go for ATM. Okay, because there is no much time left for expiry. If you expect 300-400 points kind of move in underlying and still you see that 2-3 hours left for expiry, then only choosing cheap out of the money option like 200-300 points away makes sense. Okay, so that is why this is a little bit riskier going for a strike which is 200-300 points away, because if Nifty doesn't move that much, then that option becomes zero. So conclusion, what is the conclusion? That means if somebody wants to play 2 times, 4 times, 5 times, they are happy with 5 rupees option becomes 2 times, they are happy, or it becomes 4 times or 5 times. That means somebody bought 5 rupees option, and once it becomes 20 rupees or 25 rupees, they are happy and they take the profit. For them, choosing ATM is better, okay, and much safer because less fluctuation price compared to OTM. But only if somebody is looking for 10 times, 20 times, 50 times. It is just like a jackpot, right? Jackpot, you know that you buy a lottery ticket for 100 rupees, and if you are lucky, then you can win crores of money by just 100 rupees lottery ticket. So it is just like lottery ticket. Then it can become 10 times, 20 times, 50 times, even 100 times. 1 rupee option can become 100 rupees, 50 rupees, and all this. Okay. Then slightly OTM is better. But option price can fluctuate a lot in last 1 hour expiry, and win rate also very less. So what I mean by fluctuation, that means you bought a call option at 1 rupee, suddenly 1 rupee can become 30, 40 rupees, and you think that okay, let me take profit, and suddenly that 40 rupees can come to again back to 1 rupees, again go to 15, 20 rupees, again come to 1 rupee, again go to 10, 15 rupees. Like this it will be fluctuating a lot, and you will not have time to think what to do. Okay, so that is what I mean by fluctuation. Overall, I would say ATM is better than OTM or ITM in choosing strike for hero or zero trading. And the final verdict is in hero or zero trade, strike price is not chosen randomly like which strike is available cheap in single digit, etc. Based on how much points one expect underlying to move. That means option will not become 10 times, 20 times on its own. It will move only when there is a movement in underlying. Underlying has to move, then only option price will move. So that's why based on price action setup, I already discussed whether it's a retracement or breakout, whatever it is. Based on that, you have to think how much underlying can move. And also important is time left for expiry, and then decide the strike. Because only 30 minutes left for the expiry, then going for 200, 300, 400 points away strike is very, very risky, because most of the time it becomes zero. But if there are enough time, more than 1 hour, 2 hours left for the expiry, and you expect a huge breakout is likely to happen, yes, then maybe 200, 300 points may be okay, because you still have time. But still, win rate is very less as you go far out of the money option. So that's why my suggestion is ATM is always better in hero or zero trade. So that's about this video on how to choose the right strike price in hero or zero trading. In my previous week video, I discussed in more details about the option Greeks like gamma and delta. You can watch that video for more understanding. And that's about second video of hero or zero video series. Next week, I'll come with one more video on hero or zero, and that video is going to be one of the very interesting video, because I'm going to discuss one price action strategy which I have seen with my 20 years of experience. Whenever that price action setup happens, most of the time huge move comes. Okay, so that price action setup I'll be discussing in my next week's video. Until then, bye and take care.